Avoid potential traps. What Bitcoin's weekly close means and doesn't mean. Some things you need to pay attention to. Hey guys, it's Keith Allen. Hope you had a good weekend. Hope you had a great weekend. I had a fantastic weekend. Got to see some old friends, some old lifelong friends. Had my high school reunion. It was awesome. Absolutely epic weekend. And the week and the trading week ended well as well. Posted some things in our Telegram community over the weekend. If you're not there yet, you should be. And I'll tell you how to get there in a second. By the way, my name's Keith Allen. Glad to have you with me. If you're an old school member, an OG, thanks for coming back. I greatly appreciate you. Your support means everything to me. And if you're new to the stream, welcome, my friends. I am a full-time trader. I'm a work-from-home dad, and I am co-founder of Material Indicators, and I'm glad to have you with me. I made a mention about that Telegram community a few seconds ago, and really, it is just a fantastic place to learn and gain alpha, share alpha. Really, this is a no-nonsense trading community. We really do not have any shilling going on in there. No moon boys, no bullshit. Straight crypto trading talk 24/7. So hope you'll consider joining us there. I have links to it in the description here, as well as on the Material Indicators website and the Material Indicators X channel at MI_algos. Of course, if you're watching on YouTube, live chat is open. Love to have you engage with me. That is really what makes these streams better. Is the more that you guys participate, the better they are for all of us. So I encourage you to do that. And if you haven't done so yet, don't be shy, right? I will do my best to answer any questions you have. And if you have insight you want to share, we'd love to hear it, because a high tide raises all boats. So let's go ahead and climb into what's happening in the charts. Let me go ahead and share a screen. I'm assuming you guys can hear me today. I had a little bit of a glitch last time we did this, so hopefully none of that is rearing its ugly head right now. So let's go ahead and share. We'll start on the candle chart, I suppose. And let's go to this one here. And there it is. Boom. You should have it. There is the Bitcoin chart. That is the weekly view. And as you can see, we have now reclaimed the 50-week moving average. Why is this important? I'll tell you why this is important. The 50-week moving average has really served as macro support throughout the entire trend. As you can see here I've got two trend lines here. One was updated throughout this cycle, actually since the beginning of since actually the end of the previous cycle and into this cycle. It started for me back in 2022 when when FTX crashed. That's where I started building my position, and I dollar cost average my way. You can see really the primary areas that was done in these consolidation zones. And I always look for consolidation zones like this, and those are typically places that we want to maybe add to our position. So as you can see, we did have a wick below. This flushed a lot of people out. This is a big liquidation event here at the beginning of the month. We've had a few of these lately, and the market does not like them. But guess what? The market really favors the patient and the disciplined. So if you are patient and if you are disciplined and you don't panic sell and you don't over leverage yourself to where you're going to get liquidated and punished, you can do pretty well in this game. So at this stage, we do have this particular situation. You can see that ever since that FTX crash, we have every time we've tested support at that 50-week, since we reclaimed it back in March of 2023, we have moved up. And then we find new consolidation zones. Then we break out. We find another consolidation zone. We break out. We establish another consolidation level, et cetera, et cetera. This game has been repeated over and over again, many times over. And that's really how things work. And we're now in another consolidation zone. Technically, I think we could say that this is a consolidation zone here in this range, and we have a new all-time high in it. And so what's going to happen next? A lot of people expected that since we've been getting positive news, since we have retested the support, that it's going to be just a moonshot from here. And I'm here to tell you that it's probably not. Now, before I get too far ahead, I want to switch on some indicators here that are going to give us some additional insights and maybe even add some validity to this move here. And I want to go to our timescape levels indicator. And as you can see, we really had nice confluence here with the yearly open levels. And we tested that support. And I've been saying this, since we started working with timescapes, the times, we often see levels get overshot in trading. It's just a nature of the beast, especially with crypto. We see a lot of these technical levels get overrun, and I think part of the reason is because it not only tricks a lot of traders, it also tricks a lot of algos, and those are the ones that are doing the automated trading. And so the timescape levels can often serve as stronger support or resistance. So as you can see, we have we wicked through that 50-week. We tested support at the Q1 timescape. Or actually, that was Q1 is also the yearly open. Yearly open a little bit lower, actually, at 93.3K. And we had another one at 98.3K for that first weekly open of the year. And that was tested. We didn't get quite down to 98.3, but I think we did go pretty close, 98.8, 98.9, depending on what exchange you're looking at. And that served as the retest. I was hoping we were going to get a little bit lower. I ended up having to, I did have a position here that did not get filled, but when I saw things moving and the volume coming back in with whales, I did get another sub 100K purchase of my to my Bitcoin position. So I'm happy about that. Likewise, ETH gave us a move last week. And as you can see, ETH is showing us a long signal, not just one, but back-to-back long signals, or I should say confluent long signals between both trend precognition algos. This is the A2 plus algo with the arrows here. And this is the A1 algo with the dots down here. And when we have confluence between those signals, they tend to be stronger. We also have an uptrend here, as you can see. Let me expand this for you. You can see the A1 slope line on an upward trajectory. This is simply an indication in real time that momentum has indeed shifted upward. You can see the reversion right here. So that looks good for ETH, by the way. And I also like the fact that it is holding above the 0.618 fib. Now, of course, we have to see it reclaim the 21-week moving average and the 786 fib to go back towards an all-time high. Likewise, let's look at signals for Bitcoin. We did not get any new signals on the weekly for Bitcoin, but this reclaim of the 50-week moving average really about the most bullish scenario we could ask for. So this is a positive, but there are some footnotes here you need to be mindful of. I've been saying to you guys for a while, it's not how you start, it's how you finish. And so we do need to see this stay above this 50-week moving average. If we see a wick below, then that is going to be an indication that we don't have as much strength in this as perhaps bulls would like. And it's an indication that we could see another retest of support down to this 98.3K level, or potentially even down to the weekly open. The weekly open, not the weekly, excuse me, the yearly open, which has confluence with the trend line, as you can see, right? Pretty close here. Everything's tight. Last week, it was spot on. This week, it's shifting just a little bit, but this range, really this entire range right here, looks like a potential retest zone for me. Again, I said at the beginning of this that a lot of people expect this to be really an up-only thing from here. And if you've listened to my content for at all, you know that I don't subscribe to the up only narrative. I just don't think it's a thing. We go through periods where we have a lot of upward momentum, but up only is, if you subscribe to the up only mentality, you're just going to get wrecked. So I would say this. There's a big difference between how you might treat these things if you are a trader or you are an investor. Oh, hey, Alex, good to have you with me. I appreciate you joining me. I appreciate the comment as always. And again, guys, don't forget live chat is open. If you got questions, send them in, or comments, send them in. So as I was saying, up only is not a thing. And so I really am not expecting a new all-time high this month. I'm honestly not even expecting one before the end of the year, and I'll show you why. So if we switch to the monthly time frame, and let me get both algos back up here. Okay, on the monthly time frame, you can see we have a down signal from the A1 algo, right? And I showed you just a minute ago where there was upward momentum on the weekly, but downward on the monthly. Now, does this mean there's more downside coming this month, or did we already, did that already play out? It's too soon to tell. In the most simple terms, all I can say is it's too soon to tell. There's no, we don't know. It very well could have, because this is a great test and we did just reclaim the 50-week moving average, but that doesn't mean it's all over. Likewise, on the quarterly, and this is why I really don't think well, let me just say this. I believe it would be a very low probability that we would see a new all-time high this year. And the reason being, we are on we do have a down signal on the quarterly time frame from trend precognition, from the A2 plus signal indicator up here. Now, what's the strength of that signal at this stage? This signal has a 61% probability, down 1% from last week. It was at 62%. And so this is a little bit, I don't know, suspicious in that we did get an all-time high despite having this signal, but the signal just came back stronger and stronger. So I do believe that this signal is going to likely print valid, unless, of course, we just have a major macro catalyst coming our way, and that could come in many shapes and forms. We have this whole government shutdown issue that seems to be moving in the right direction. So that's something to be considered. And it's likely going to take more than that, in my opinion, because the market knows that at some point this government issue is going to resolve itself. What form that takes, what liberties the president takes along the way, what gets sacrificed along the way, all those things remain to be seen. And all of those things could have an impact, a bullish or bearish impact on the market. So that's something to pay attention to. We also obviously have some geopolitical tensions happening in various hotspots around the world. And we have this tariff trade war going on with some questionable rulings some things waiting to be ruled on from the Supreme Court, and as well as the ongoing negotiation with China. So all of those elements could serve as catalysts that send price in one direction or the other. And you better believe that the market manipulators are very happy to take advantage of you, straight up. So what does that look like? Hang on. That's not what I wanted to see. Let's take a peek real quick at what's happening with ETF flows. This is kind of surprising that Solana has had like no red days. There's not a lot of volume happening here. I think that there's just some quiet accumulation going on with the Solana ETF, but the ETH ETF, what happened last week? A lot of red days in the past week. One day of of positive volume, I should say, on Thursday, and then Friday. It looks like BlackRock came back in with a little bit more buy volume, but still it was a red day overall. And on the Bitcoin side, I think a similar set of circumstances where all this stuff just annoying, all these pop-ups. On the Bitcoin side, similarly, There was a green day on Thursday, and then followed by another big red day on Friday. I'm guessing today. Well, who knows? Maybe there's going to be some profit taking. People got excited. People are still concerned, so there could be some profit taking here, and that's why we're probably not seeing things pump super high today. Um, Nonetheless, as I was mentioning, the manipulators you got to watch out for, right? And we saw something play out last week. We saw this big giant stack here. uh, I mean, massive, massive, well over 250 million in ask liquidity. These guys had no intention of getting filled. They just wanted to push price down so that they could get filled. And then what happened? Well, I'll tell you what happened. And then another block of manipulative liquidity appeared, plunge protection, and a good sizable amount showed up here to send price back up. And you can see price moved almost instantly when this appeared. Again, no real intention of getting filled. It served its purpose. They pulled it just like that. And now what's happening? You can see on Sunday, we saw a price there. We saw the asks. This is the market maker sending the asks back here. Let me add some contrast and you can see a little bit better. Market maker sent the asks higher and the bids started stair stepping higher as well. And you could see how price moved with it. And today things get a little bit different. We get a couple of steps down, price comes down, and now they're trying to push it back up. So the volatility is expected. The volatility is not going to go away anytime soon. And the manipulation isn't going to go away anytime soon either. But what you can be watching, what you should be watching in terms of order book and order flow, look for these large blocks and these heavier concentrations of liquidity, whether they're asks or bids. And what you ultimately want to see is the brighter blocks of liquidity on the side of your bias. So if you're bullish, you want to see bright colors because brightness equals more volume. You can see the key here, right? White is upwards of 50 million in one single level, and so right, this was 68 million. I got some filtering on here, that's why it's like that, right? This was, here we go, 70 million. So now when I take the filter off, white is 70 million. So this was 70 million bucks, and you saw what happened. And when it got pulled, what else happened? Price started coming back down. And so you can see how it's now thinned out here a little bit, and you can see how we have these asks stair stepping upwards as well. And so you need to watch this liquidity, and you need to watch the order flow here as well. And I would caution you, yes, we have a bin CVD here, and you can see the orange class is the smallest order class, $100 to $1,000 orders. The brown class is the mega whale class, $1 million to $10 million orders. And both of those are on an upward trajectory over the past month. I would caution you, don't fall in the trap of believing that this smaller order class is strictly retail. Retail certainly lives here, but so do institutions using TWAP bots, placing small orders to quietly accumulate or distribute without moving price. And so the smoother the angle, right? The steeper and the smoother the angle of attack or decline for that matter, the more likely there's some TWAPing going on. And additionally, I want you to watch purple whales, because purple whales have historically had a lot of influence over price. That has, I will say, changed a little bit. That dynamic is changing a little bit here in this past year because we're seeing brown whales come in with more volume than they had in previous cycles. And so be mindful of that. Purple is doing a lot of trading through this as well. So if we take it back down to the weekly time frame, and that's easy for me to say. If we take it back down to the weekly time frame, we can see a little bit more of the volatility between the different cohorts. And likewise, on the daily time frame is where we see the most. The other thing that I want you to be watching here is these key moving averages, right? So can we number one, hold above this 50-week moving average. And number two, can we start reclaiming these levels? We got to get up above this July timescape level. We have to get back above this 21-week moving average. And then we can start. I mean, there's not much technical resistance in place above that. We have this 114K level, 114, 115-ish, where we have a lot of confluence in that consolidation zone. It has been pretty strong resistance as of late. So be aware of that. You can see the 21-week moving average currently sitting at 113.5K. This is going to serve as resistance in the short term. Once we flip it, we've got significant upside to get to the Q3 open and see if we can get back into all-time high territory. I would not be surprised if we range here. Maybe we range between the 21 and 50. Maybe we have some fake outs in here. I would just caution you and be prepared for those fake outs and shakeouts because they are going to continue through the year, in my opinion. What was I showing you here? Oh, the whale volume here on these lower time frames. You can see purple whales in this past week obviously distributed quite a bit, and then they've had a few moments of buying back in, including here just a little while ago, but not a significant amount. This is a small amount compared to what they started with during the week. They had sold at one point. They had sold down to here, literally all of what they purchased, and or almost all of what they had purchased in the from up here, and now they've only bought back, gosh, less than just about 10%. Okay, so keep that in mind. And when you see these spikes, you probably if you're trading in the short term, you can follow those, right? If you're trading in the short term, I didn't mean to click away from that. If you're trading in the short term, it's a pretty safe bet when you see this volume going up like this that price is going to move with it. And so we look for the areas with liquidity. We're cautious of the areas with thin liquidity. As you can see, there's not a great deal holding this up right now. But we do have a little bit of protection here just above 104K. We have more at 103K, and we have more at 102K. So this is encouraging to see, but be mindful that we have this game of liquidity herding going on. And sometimes it's very, very easy to see like it is here. And other times you have to look closely to see what's happening. In other words, none of these positions have been here very long, which means there's not a lot of conviction for them to stay. They might even just be here as liquidity herding. So the TLDR version, the too long didn't read version of that is don't trust them. If they move a lot, expect them to spoof. That's how I play it anyways. Hey, Bryce, nice to have you back, man. I appreciate you coming back to give me some support here, and hope you're gaining something out of this. So that's basically what I'm looking for here in terms of the order book liquidity, the liquidity dynamics of things moving like this, right? This when you see it stair step down, that is attracting price to move lower, opening the door for price to move lower. And what these guys do is they try and trap you, right? They push price, they push support up. You see buying happen, you think it's going to happen, and then they change the game on you. So you need to have conviction with your moves and your positions, and not fall into the trap of over trading, right? Again, I had mentioned earlier, there's a difference between trading and investing. And if you're building a position for a long-term investment, then you should be doing a lot of sitting on hands and looking for the opportunities to add to your position, looking for opportunities and levels that you want to take some profits that you can reinvest and compound with. And I would say you identify those levels and you stick to them. Simple as that. Now, if you're trading, all of this is volatility. All of this is opportunity. So look for those opportunities and you can trade them. Swim in the wake of these whales. I'm telling you. Watch the volatility. Watch the liquidity, and as it's moving, you can quite often take advantage of those moves. I mean, this is just like plain as day. When you see something like this, you know price is going to move lower, and when you see something like this, you know price is going to move higher. So take advantage of those opportunities and manage your risk. Resist the urge to overtrade, and you're going to do great. Hope that gives you guys some insight. Again, if you're interested in any of engaging more, I invite you to join me in the Telegram community. The link is in the description, as well as at the top of the Material Indicators homepage, and at the top of in the profile for the Material Indicators X page at mi_algos, and of course on the YouTube channel as well. Thanks again for following along. Hope this helps you trade smarter, my friends. Have a great week.